Good afternoon and welcome to this next episode of Governance Dialogues. My name is Aeisha Mastagni and I'm the Managing Director of Governance Center, and I'll be your host for this episode today. And for those of you who are joining the program, who have joined the program previously, you're welcome to join us again for what I believe will be a fascinating conversation around issues dealing with climate change and the role of national oil companies. And for those of you, again, who've joined in previous conversations, you would know that we've addressed the issues relating to climate change, specifically in conversations with a number of thought leaders. For example, Robert Eccles, who's a professor at the Oxford University, dealing with issues related to disclosure of climate risks and climate liabilities. We've also had a chance to travel to the United States and speak to Aeisha Mastagni, who is the representative of CalSTRS, on the Exxon Mobil campaign, of which the results were released at the end of May, and where a number of board members were replaced with a view to make the company more interested, let's say, in issues related to renewables and climate-related risks. And in fact, what's interesting is we've seen a number of cases, from Exxon to also Chevron, and even some of the more progressive oil companies, such as Royal Dutch Shell, which was ordered by a Dutch court to actually cut its greenhouse gas emissions. And in an article in the Washington Post, in fact, the journalist called it a bad day for big oil. And I think, in my view, it was also a little bit of a watershed moment for the industry and for this conversation on climate change. And in fact, what I would like to do in this episode is to, reflect on some of these issues and this watershed moment, not only for the privately owned national oil companies, but also for national oil companies, those that are majority owned by governments. And these companies represent approximately half of the world's oil and gas production and 40% of investment in the oil and gas sector. And I couldn't think of a better invitee for this conversation than Dr. Valerie Marcel, who's joining us today from London to speak about some of these issues related to big oil, and national oil companies, their governance, and their impact on climate change, which is an issue that I believe concerns us all. And of course, as we all know, an issue that institutional investors and governments following closer and closer. So Valerie, thank you very much for joining us. And it's a pleasure to have you and to have this conversation with you today again online.
Thanks, I'm happy to be here.
So perhaps before we dive into the sort of the substance of the questions that I'd like to talk to you about today, I'd like to maybe just say a few words about your background. Of course, you've done a lot of work on issues related to governance of national oil companies and structuring and sort of the sector specific issues. And you're currently leading the New Producers Group, which is south to south knowledge sharing network of 30 emerging oil and gas companies. You also have responsibilities, and of course, this is, I believe, how we met at the Chatham House, where a number of your publications recently deal with the development of national oil companies, in particular in emerging markets. And of course, you've also published a book that's very well known called Oil Titans, National Oil Companies in the Middle East, which is a book that I've read a while back. And you're currently advising in your work governments in sub-Saharan Africa, in Mediterranean countries, South America, and the Caribbean. And these are all areas that I would like to perhaps discuss with you in today's conversation. So again, pleasure to have you here. And perhaps for the first question that I would like to ask you today is around declining oil rents. And of course, that's a big preoccupation for governments, and particularly in countries where sort of the break-even cost of oil production is not low. And I'm wondering, what is your view on the standing of national oil companies domestically, and in light of this greater pressure by governments and institutional investors to go green and to invest more in renewables? Is there a risk that national oil companies sort of go in the political irrelevance going forward?
Yeah, it's interesting how much the world has changed, because we weren't talking like that just in 2018. I think the last year with COVID, the oil price crash, the energy transition seems so much more real now, and it's also maybe the run up to COP. Prices come back up, but we know, there's a momentum now that's driven by a lot of the industry trends that you just highlighted in the introduction, and that are putting huge pressure on private oil companies. And there's no reason to think that NOCs will be spared. So yes, I think that a number of NOCs will lose a lot of their political power as the value of the oil and gas that they would normally export, or that they do export, falls. So, irrelevance, I think, is in the cards for some of them. I think, Saudi Aramco, KPC, ADNOC, these are companies with very low cost assets, and they're working really hard to reduce emissions. So they have a market for a long time. But, if you think of PDVSA in Venezuela, you think of NNPC, Sonangol, they're higher costs. They're not high costs, but the value of what they have is changing with time. And so that has, I think, will have significant repercussions for, right now they're sort of king players in their countries, and that probably won't always be the case. So how that evolves will be really interesting to watch. But I think, since the days of oil titans, we're looking perhaps at a different ecosystem of the oil sector. And NOCs were the dominant players, I think, in the last 20 years, I suppose. And now I think we'll see a bit of a decline.
Interesting. Personally, I mean, from where I work, and we had also a couple of webinars we hosted on issues related to state-owned companies more generally, and governance, and we evoked the issues of oil and gas companies. I'm not personally a believer that sort of big oil or oil is sort of going to be relevant in the short term. But what's interesting is that a number of countries, and indeed a number of countries that you highlight in your research, Guyana, but also Lebanon, which I know very well, have made oil and gas discoveries, and a number of emerging market countries are looking to establish, in addition to the sort of the existing NOC ecosystem, additional companies, and therefore perhaps establish also sovereign wealth funds, which will be used as stabilization or future generation funds to essentially recycle, let's say, for the lack of a better word, these oil and gas revenues. And there are also interesting questions in that regard that I wonder if you can comment on, in terms of particular from governance risks, from point of view of how these companies are set up themselves, but also how the process of, let's say, passing on these revenues to these sovereign investment vehicles is managed, because there is a risk of how these funds are invested in, and indeed whether they're invested for future generations. No?
Yes, I mean, it's interesting because so Guyana, having made really important discoveries, I think is thinking of creating a national oil company, and they have a legislation in place for a sovereign wealth fund. Lebanon, which you mentioned, doesn't have discoveries and is talking about creating a national oil company and establishing a sovereign wealth fund. So it may be, a little early in the game for Lebanon to be talking about these kinds of developments. But I think generally what we see with when it comes to sovereign wealth funds is that the oversight of the sovereign wealth fund, the more institutionalized the rules are for using the money, the better, because I think there's a huge temptation for a developing country to tap into the sovereign wealth fund for budgetary shortfalls, and with good cause, because if you're if you're putting your savings in a fund and borrowing to cover your budget deficit, that's not feasible. I mean, it's not sustainable. So I think those kinds of institutionalization of the rules and keeping them as firm as possible, I think is really important, and just to have a counter-cyclical kind of use of revenues. But I expect sovereign wealth funds are a bit like national oil companies in the sense that governments, they're so critical because of the value that they hold in terms of money, that governments are always tempted to try to control them. So I think that that'll be, that'll be a trend anywhere they have sovereign wealth funds as well.
No, I think it's interesting, and I agree with you that, and I think this is why I also asked the question, is around not only the setup, the governance risks in NOCs, and we'll talk about that also in a minute, but also how the funds are recycled, and the fact that, of course, there's a huge temptation to tap into these funds. And if there is no legal framework that underpins exactly how funds are split between the different sovereign investment vehicles, then of course there's political factors, and it's an industry that, let's face it, is subject to perhaps, if I may say so, larger than average political pressure, right? And on the other side of talking about national oil companies, and that's of course been subject of enormous media coverage, and surely you've been commenting on that also widely, and we have written also a number of op-eds on the Aramco listing, which was, galvanized a lot of attention, not only from the perspective of the oil and gas companies per se, but also in financial services world, where stock exchanges have been vying, for months to courting Aramco for the listing, and London Stock Exchange has actually proposed a rule change to attract the company to list. And finally, as we all know, the decision was made to divest or to list a very minor stake on Tadawul. But I think it's only sort of one example of a recent listing. In the past, we've seen companies in the sector coming to list from emerging markets to, let's say, typically London Stock Exchange, but also to some extent perhaps in other developed markets. And I wonder if you'd like to maybe say a few words about, post-Aramco privatization prospects for national oil companies. Is there going to be an appetite, in light of post-COVID environment, perhaps fiscal pressures, to go to markets and perhaps to tap into markets, do secondary issues, or, divest at least minor stakes in these companies? Or do you believe that logic is not currently in the cards, in the mindsets of executives of these companies?
Yeah, I think in the mindset of the executives, there's an interest in going to equity markets. I think, because of the well, of course, because of the capital it brings, but also because it kind of puts the company in the big leagues with industry leaders and peers, successful peers. So there's still an interest, I think, in that. But I'm not so sure that capital markets will be that receptive to NOC listings in the coming years. I think there's a growing concern about stranded assets and under discounting or undercounting the carbon risk or transition risk for already private companies. So certainly they would have a view of NOCs as downplaying the risks that their assets are exposed to over time. And perhaps also, I think what's really important now in a transition is to be able to show that you're nimble, that you have a convincing ESG narrative, and that you have a transition plan, and that you have basically like a growth business for the next decades. And a lot of NOCs, I don't think have been very good at really mapping out a plan for how things, to adapt to how things are changing. Like Sonatrach had a really interesting transformation plan just before the revolution. And so it was really heading towards some major shifts in its strategy and identity. But that's quite rare. You see that Ecopetrol also, I think, has done that. But you don't. It's not so common outside maybe the classic NOC leaders. So I'm not convinced that markets would be have such an appetite as they might have done in the past. I think issuing debt is very different from equity, and I think the markets are much more risk adverse when it comes to climate risk now.
Right. No, I agree with you that it's actually, I think, a new conversation that we're starting now on ESG narrative and state-owned enterprises, because more generally, this whole sort of the G of the ESG has been evoked and to various extent, and depending on the country, addressed in the SOE context by corporate governance codes, by professionalization of boards, by transferring SOEs under their sometimes under the portfolio of sovereign wealth funds, which subsequently helped to restructure and professionalize them. But I think that this whole kind of a more comprehensive look at ESG from an SOE perspective is something that is relatively new, and I think it obviously also touches on the oil and gas sector. Speaking of sort of oil, sort of listed oil and gas companies, I mean, some of them, and I'm thinking, of course, you're probably smiling right now, is the example of Petrobras this year. And I've interviewed actually on this program, we didn't speak on at the time on this point directly, the chairman of the Brazilian securities regulator on various issues on regulation in the industry and corporate governance. But Petrobras was, of course, an interesting case this year, although the company is listed and has made important governance changes, as had Aramco pre-listing. The president basically intervened and removed the CEO, and we've seen an enormous reflection in the valuation of the company immediately post that move. And so what I'd like to ask you is sort of the risks that you see in listed NOCs. I mean, the ones that have sort of minority stakes or outstanding in public equity markets. What are the risks that you think still exist for investors? Are investors more or less, let's say, fully protected? And how prevalent or how possible would be the Petrobras scenario in other countries where national oil companies have outstanding equity or perhaps bonds listed, as you mentioned earlier?
Yeah, I guess NOCs that are partially listed are bound by the disclosure requirements and the governance requirements of where they've listed. So it really increases their governance practice in terms of financial accounting, of all sorts of, transfer pricing, a lot of the expenditure that they might have on, social programs or what I call the national mission or their CSR. It's suddenly they have to account for all of this, and they have to have very regular disclosure. They have to produce annual reports with, reporting on HSE performance, all sorts of things that were not required in most cases by their shareholder pre-listing the government. So all of that improves, it sort of sets the scene to really improve the governance, the corporate governance of the company. But it doesn't protect the minority private shareholder from instances where the government will just increase dividends unilaterally, or increase change the fiscal system, or require it to spend on new areas, or to take on a greater share of the burden. So, and it certainly doesn't protect it from informal contacts to the board or to management, which is one of the big problems of NOCs, is that How does the VP of, refining in the NOC refuse a call from the governor of the state that wants to talk about the procurement that they have, or about, hiring this person? So it's extremely difficult in practice for an NOC to insulate itself from those government requests. And how much visibility does the private shareholder have of that activity? Well, probably not very much. I think you can look at annual reports, but they don't tell you what kind of things are happening behind the scenes. And that's probably how things got a bit out of control, to put it mildly, in the Petrobras case.
Yes. No, of course, it's interesting you mentioned also. I think I agree with you. There is this tension because, it's in the corporate governance world, sometimes, acronyms get lumped together, and we talk about CSR and ESG and all kinds of other objectives that institutional investors, sort of expectations institutional investors have, and there are also corporate boards have. But I think in the context of NOCs, it's true that there is a tension, and we've seen it in the case of Aramco, for example, very well, between, let's say, traditional ESG type parameters and CSR parameters, where governments had, or in the past, it's not the case so much anymore, but had the temptation to basically use this company because it was an island of excellence, so to speak, to then perform various other objectives that are, let's say, officially beyond the remit of what traditionally would be an NOC remit, and that's changed with the listing. So I agree with you on that point, but in terms of disclosure, of course, also interesting point that, of course, listing is at least in our work with SOEs, in my view, it's probably the most powerful lever to affect corporate governance of any state-owned company, because it eventually renders it subject to corporate governance requirements of the stock exchange and many other requirements and investor oversight. And yet we see, as you mentioned with the Petrobras case and others, that political interference is still not excluded by virtue of the application of these rules. And I would like to sort of ask you, speaking of, again, listed companies and transparency, I mean, there are interesting initiatives in rendering climate disclosure more transparent by TCFD and other participants. Surely you are involved in this discussion and dialogue. Do you think there will be a significant sort of impact from adoption of these various accounting rules that are coming to fore in the NOC case? Rendering these stranded assets a little bit more, let's say, transparent.
Yeah, it's interesting. There's been a lot of resistance historically from listed companies, and I mean private listed companies, against that kind of higher standard of disclosure of risk, and how risk is viewed. Fundamentally, how risky. You can repackage and turn things around and get a good spin on a lot of this, but there's an issue of maybe just fundamental trust of how things are approached. So I think there's ticking the boxes and satisfying the requirements, but then there's sort of the culture that's behind it, the narrative that's behind it, and how convincing you think a company is when they're talking to you about how they view risk related to climate or other things, and how you think they're managing it. I think overall risk management has not been the strength of national oil companies. I think when they're listing or when they're issuing bonds, they are having to answer a lot more questions than they would if they can fund activities completely from their earnings, and no one's asking them those questions. I think that's a very healthy discussion to have, because if the state is not asking those questions, which it should, as the primary shareholder, it's good that markets would be doing so, and I think it's necessary to have a real like a constant process of challenge, and that is a really important governance sort of process, because it's about accountability, and that if you don't have a checks and balance internally within your country, what's interesting is that markets can provide a bit of that check, and say, well, we don't really buy that pitch, so give us another one.
It's I see your point on the risk, on the risk profile of NOCs, and I think it's perhaps, I don't know if you agree, it's perhaps even a broader conversation on risk, and this is something that international regulators like the OECD and other international organizations working on issues of governance are looking at closely. What is the let's say the capacity of boards today to address risk, the COVID risk? Were boards sufficiently, let's say, prepared to address these risks? And various reports and research have come out with various conclusions on that front. I mean, some think that though some companies were not officially, let's say, prepared for a COVID type risk, they had other risk management mechanisms they put in place, and that has, in a way, they've performed or were able to withstand the current risks quite well. And I think it's interesting. I agree with you. It's interesting to think about how national companies will be dealing with these risks, and notably, I mean, the fundamental point of our conversation around climate risks. And perhaps, I don't know if, just to cognizant of time, I would like to maybe come back to you with just one last question, or sort of if you can share your thoughts as to, looking at the risks that national oil companies face versus, other sort of privately owned oil and gas companies. And I mentioned examples earlier of, Exxon and others that are facing significant pressure. Do you think that the world of NOCs is facing the same types of pressures and the same types of risks that the world of, let's say, privately held operators, and what kind of considerations, if you were an investor, would you look at or think of in the case of NOCs that might be perhaps not applicable to the privately held scenario?
Yeah, I think national oil companies in the GCC have been quite proactive at adapting to the transition and positioning themselves, because they have assets that will find a market for a very long time if they play their cards right. So they have a long-term view. But I think a lot of NOCs don't have that long-term view. And they've been slow to adapt their strategies. And I think the boards have not really been playing the kinds of oversight role that they should be in many cases. I think boards are a critical governance mechanism for NOCs. And in many of the NOCs that I've seen from close up, the boards are not effective. The board members are put in place on political merit, and they aren't asking the kinds of questions they need to ask. And the oversight role is so critical, because NOCs do have space to transform themselves into something that creates value over 30, 40 years in these countries as energy providers potentially, or as supporting reducing emissions in the country and supporting a transition to a low carbon pathway. They're not just spoilers of the transition. They can be a lot more. And I think what's critical is for boards to be thinking of the value to the country long term, and how they can steer the NOC towards long-term growth, but with like sustainable outcomes for the country.
Thank you for those concluding thoughts. And I think we've covered a lot of ground today. Of course, in half an hour there are many outstanding questions, particularly on the climate impact issues of NOCs, and we'll be addressing that also in a series of episodes that will be coming out over the course of the fall months. But in the meantime, I would like to perhaps leave our audience with a few ideas of resources they could tap into if they wish to look further or investigate further the concerns that we've been discussing today around NOCs and climate impact, and notably, I'd like to suggest a report that was put out by National Resource Governance Institute. I also have trouble with this acronym, and RGI, which is called Risky Bet, National Oil Companies and Energy Transition, which addresses specifically the issues that we've been discussing today. I would also like to recommend, of course, your page, where I believe most of your research is featured on the Chatham House website, and also on our own website. It's www.govern.center, where our OPEDs, notably, and we've been mentioning it today in this conversation on the Aramco listing, and many others are available for consultation. So with that, I would like to thank you, Valerie, for joining us, and we hope to have a chance to continue this conversation, perhaps in other episodes in the coming months.
Sounds great. I would love to. Thanks, Aeisha, for having me.
Thank you. And for those of you who've watched this episode, we encourage you to subscribe to our channel, and please stay tuned for our next episodes, which, as I mentioned, will be continue to addressing climate risks and how boards are prepared, or perhaps in some cases unprepared, to address them. Thank you for your attention.